Hi there, this is routine weekly traffic light update for the week ended on February 17th, 2017. Prior to going into the detail of the presentation, here are the disclaimer. Traffic light and capital appreciation points are the results of proprietary risk analysis model and should be used as part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here's the agenda. We'll review the latest traffic light, the long-term indicator S&P 500, the traffic light intermediate indicator on Dow Jones and Nasdaq. We will evaluate bearish and bullish trades. Traffic light S&P 500 is the long-term indicator. Here's the overview at the end of February 17, 2017. This is the second time in history that traffic light of S&P 500 reached the bottom. The last time it reached the bottom was about 1995, prior to a bullish run. Let's go over some legends. X-axis here represents time. The oldest period is on the left, and latest period is on the right. Y-axis here is the daily close of S&P 500. The daily close of S&P 500 is the blue line, okay, and we closed about 231 or 32 on Friday, somewhere around here. The green line here is the traffic light S&P 500. It measures the risk of in S&P 500. When it stays low, in green zone, it means that there are less risk in the market. When it's high, like especially breach the red line, it means there are a lot of risk. Horizontal purple and the red line apply to traffic light S&P 500, the green line. The purple line is the long-term position indicator. When the green line crosses above the purple line and crosses below, it's less risky to take a large position as shown here. The red line is a long-term conservative line. When the green line breaches the red line successfully, it is better to take a long-term conservative position. From November 18, 2016 announcement, we compare the current situation to that of mid-2012. In the 2012 period, as the index attempts to reach a new high, there were pullbacks. Each pullback was less severe than the one before to keep the breakout intact. Let's observe whether the current market shows the similar traits. But I do like to point out the current PE ratio is somewhere between 25 to 26. It is significantly higher than that of 2012. Back then was only 14 to 15. Let's look at traffic light Dow, an intermediate indicator. The indicator has a good history of showing intermediate bullish and bearish signals, especially when the red line and the green line cross over or showing divergence. Let's go over the legend first. Blue line is the daily close of Dow Jones, and that's why the y-axis is for. The red dash line here shows the money that go into the Dow Jones. The green line represents the money flowing out of Dow Jones. Orange solid orange dash lines are the support for the red dash and the green line. The bright red here and the purple reflects the traffic light S&P 500 in 2008 major correction event. The bright red line represents the time when traffic light S&P 500 crossed the red line threshold. And for the purple, it represents when traffic light S&P 500 crossed below the purple line. Before traffic light S&P 500 crossed above the red line, traffic light Dow already shown bearish crossover. If you think carefully, the green line crossed above the red line. After the traffic light crossed below the purple line, then traffic light Dow also show a bullish crossover, where the red line crosses above the green line and shows continue a bullish trend. Let's talk about divergence. In the 2010 period, as the index goes up, the red line goes up. But in the 2011 period, as the index goes up, the red line goes down, and eventually led to a green line surge and a bearish crossover, which we had a 6 months correction here. And we need to continue to monitor this type of event. We are seeing red lines decreasing as the index makes new high, but the green line stay low. So it's not bearish yet, intermediately. Here's a zoom in view of what we just discussed. The red line is descending, showing descending lower high, while the index makes a higher high. The second bullish point is that red line descend, come to a halt, but prior to the support, but it continued to ascend. And the green line continued to descend and stays low. We can see the similar events in traffic light Nasdaq. As you can see, traffic Nasdaq recently made a new high, but as it made a new high in the previous records, there's a pullback. Either it could be a 6 months pullback as in 2010, or a couple of weeks of pullback in 2013. This year it hasn't happened yet. I will zoom in the mentioned period of 2010 and 2013 in the next slide. However, I also want to point out to you at this scale, we can see that the red line, though it's ascending, but it reached a so-called somewhat a resistant level in the past. In the past, when the red line reached this level, it would just start to descend. If you look at in 2013 period, 2010, here's a zoom in view of the mentioned period. In both situations, the index start to descend when the red line start to flat out. The bullish trend started after the cap on S&P 500 occurred, or the red line start to ascend. In 2010 period, there are numerous cap occur. There's 1 day 2, 1 day 18, 1 day 4. If you desire to know more about S&P 500 cap, you have the privilege to access Starter A service for free during the trial period. Here's a zoom in current view. Here are some bullish and bearish observations. On the bullish side, the red line made a new high while the index made a new high. Second, it seems that red line start finding support and ascend again. On the bearish side, the green line finds finding support near the dash point. In summary, traffic light S&P 500 is in green and shows more long-term bullish sign. Traffic light Dow and Nasdaq shows some intermediate bullish sign. Traffic light Dow and Nasdaq descending red line are pausing prior to the support and start to ascend. Traffic light Nasdaq money in line is near resistance level, and short-term gain could be limited. Thank you for listening. If you have any questions, please do email me.